right? So I'm just gonna be making you guys a lecture based on time-based volume profiles. You understand? Very specific time-based volume profiles. It's initially what we were initially discussing within the group last week, because there's specific things that we need, or specific characteristics that initially tend to present themselves within the markets day by day, right? For pretty much all the sessions, but for today I'll just be focusing on the AM session, and specifically the 9:30 and the characteristics of 9:30's volume injection, to initially say the least, right? So I'm pretty much expecting everybody to know what 9:30 is, right? Outside time, price, and energy, right? Even if you are trading support and resistance or whatnot, you at your base would be initially informed, right? You'd be basically informed about what 9:30 is, right? That is the market open, right? To be initially specific, the futures market open for your NQs, your ES, your Russells, RTYs, and your YMs, right? This is initially a volume injection that tends to present, not even tends, it presents itself every single day, or every single trading day, right? Every single futures trading day, right? So these are selected factors that we initially need to understand in regards to our 9:30 volume injection or market open, right? Firstly, know that it's a liquidity injection, right? Large flows of institutional money are entering and adjusting positions, right? That is pretty much what we mean when we say volume, right? The more the volume, the larger the amount of institutional order flow being engaged or induced within the markets, right? Secondly, volatility surges, rapid price movements occur as overnight orders and pre-market positions are absorbed. You understand? Thirdly, true direction emerges. The dominant trend of the morning or even the day often reveals itself shortly during or after the market positions, right? And this is pretty much where most people tend to struggle when it comes to trading the AM session, right? The question is, do you want to trade before the market open? Do you want to trade after the market open, or do you want to trade during the market open, right? And initially, how you find the answer to this is you understanding the characteristics of this whole entire volume injection and its given specified tendencies. You understand? So first one, right? Liquidity injection, right? This, in its simplest of form, right? I'm going to try to explain this in baby words. Liquidity injection is initially the true description of what energy is, right? It's not even a footprint. It's what energy is initially driven off. You understand? The reaction from here to down here during this 9:30 market open, right? This is institutional, right? This is high volatility. This is why we call it's an expansion, to be more specific, right? And the reason why I don't like utilizing the terms of accumulation, manipulation, distribution, and I would initially resort, right, to saying and stating accumulation, expansion, and expansion, because manipulation on a lower time frame is a distribution, right? And the distribution on a higher time frame is a manipulation. The minute every direction is reaccumulated, right? The previous one is going to be regarded as a manipulation. You understand? For example, let's say I was taking a trade from down here, right? We've seen price draw to the upside, right? This would be regarded as an expansion, right? Some would say it's a distribution, right? The minute all of that is reaccumulated, you understand? This becomes a manipulation, and then this becomes a distribution. And the minute this is accumulated, this is a distribution, this manipulation. You understand? Distribution, manipulation. manipulation, distribution. Distribution, manipulation. Whenever it is accumulated, right? That's why I just resort to all this. Whether the price goes up or down, those are expansions, right? Because price is expanding from here to up here, expanding from here to down here, expanding from here to up here, from here to here, here to here, here to here, to here, and here to here, and there to down there. You understand? All of this to me are expansions. You understand? And that's why we initially have something called scheduled volatility, right? It's because that is the easiest way, or the easiest way we can get ourselves closest to where true and easy and direct volatility is gonna initiate itself. You understand? And in this given case, scheduled volatility is your 9:30 market open. You understand? If you're trading an economic event, that would be your scheduled time for that given event, whether 8:30, 8:15, right? 9:45, 10 a.m., you understand, 2 p.m., 2:30, and so forth and so on, right? If you are a London session trader or a European-based futures trader, right, you would refer to your 2:30s, your 4:30s, you understand, your 3 a.m.s, because those are also scheduled time where volume tends to present volume, right? But for today, we're going to be sticking to 9:30, and then we're going to be building up from that, right? So, true direction emerges, right? The dominant trend of the morning or even the day often reveals itself shortly during and after the open. You understand? Either during, right? Or after the open, right? What does that initially mean, right? The 9:30 market open will not always be fixed to do one given or specific thing, meaning it's not always going to be what you want to be trading every time. Sometimes it's going to be an initiator for what is still yet to come. Sometimes it's going to be a continuation of what has already begun. Sometimes it's going to initiate what is supposed to happen or become, right? That's not proper English, but yeah. So first one, we have different types, right? These visually are different types of volume injections. You understand? Your first one is going to be continuation-based volume injection, right? This is, when I'm saying continuation-based volume injection, this is going to be a universal term that we can utilize for all types of volume injections, right? But for this case, right, we are going to be focused on the 9:30 volume injection, right? Tends to follow the order flow direction established after or during, right, time-based events such as an economic calendar event or an algorithmic order flow, right, such as daily trends or session trends, right? Continuation-based volume injections, right, guys, tend to be continuations of what has already initiated itself ahead of this given market open. For example, when we talk about such as economic events, right, we're talking about news event. To be overly specific, red folder news event, right? That is another form of time-based volume or energy injections. You understand? And in this given case, right, you would find that we have a trend initiator, which is based on an economic event, such as your 8:30 red folder news event. We can say it is CPI. CPI begins the trend in this given case, right? The 9:30 is a continuation of that. You understand? And then towards everything else after 9:30, you expect that to be third stage distribution, because first stage distribution is ahead of it. Second stage is during 9:30. Third stage is everything after. Executive price distribution right after, right? In simple terms, delayed distribution. You understand? So, footprints like this from an economic perspective, right, is going to be when price begins to trend a specific direction at 8:30 or during an economic news event prior to 9:30, and then 9:30 is a continuation of that, meaning it goes the exact same direction as your 8:30 volume profile or volume injection, right? That is it in the simplest and rawest form. Your second one, right, will be your reversal based volume injection, right? And this one tends to create true order flow direction and establish the direction of the true session or daily expansion, meaning it tends to create the high or low of a session or the true day direction, right? And it initiates the true and most influential volume or direction expansion of the true session or day. You understand? Like we said, accumulation, manipulation, distribution, accumulation, expansion. You understand? So this initially means it is the beginner of a true and highly influential expansion of a session or a day. Meaning the price can be moving bullish for the whole entire day, vice versa for bearish, right? It can be moving very bullish for the whole entire day. And then 9:30 initiates the reversal. You understand? It becomes the first stage distribution, right? Of where the session is initially going to draw or distribute to, or the day, best case scenario, the day. You understand? It's going to initially drive itself to. And for that to initially happen, that means the PM session needs to be second stage distribution in regards to session volatility, right? And the first one would be the AM session, right? It is often seen when there is no significant economic news event or when a weak event has occurred, right? Whereby now you have a red folder news event. For the second one, right, you have a red folder news event that is very weak, very volatile, or very non-volatile to be more specific, right? Whereby now it just looks like any other candlestick that came before it, right? No matter what red folder news event, right, when you have a weak volume injection, right, during an economic news event, right, if it's very weak, that is going to be your first hint and your first key into identifying that we could possibly have a very volatile and highly explosive 9:30. You understand? So this will either be present when we had a weak economic news event or we had no significant one prior to that day or prior to that market open, to be specific, right? And this tends to present delayed distribution, meaning it tends to provide us with second stage distribution because it is beginning the trend, right? And distribution, delayed distribution is executive candles that come after it. Those become, right? Those become second stage distribution. You understand? So simple terms, 9:30 creates the high or low of the day or the session, right? And everything that comes right after it is a continuation of that, right? Number 3, right? This is going to be your liquidity hunting based volume injection, right? Simple and traditional terminology would regard this as your manipulation, right? This means 9:30 will tend to go the opposite direction of where the true order flow of the true session or day is initially predetermined to go. If the largest volatility of the session is going to be bearish, that means 9:30 goes bullish. You understand? And vice versa, right? It tends to move the opposite direction of the true session or true daily expansion. Well, by now, this move to the downside, right? This is your daily or session expansion. 9:30 opens, spills to the upside, drawing to potentially a time-based PDA, which could be 9:30 right? If you're on the 15-minute time frame, it could be 9:45, right? And then reverses. You understand? And this types of 9:30 market, excuse me, and these types of 9:30 market opens, right, are often driven by weaker internal look-back intervals, right? From a quarterly theory perspective, right, lower cycles. You understand? That's the easiest way I can initially explain it, right? That means it's referring to internal time-based PDAs, time-based candle ranges, time-based price levels. You understand? Within the internal of this candlesticks within here, right? And just to add in, guys, the fourth one, right? This is gonna be your accumulative base volume injection, right? In other words, time distortion. You understand? This is the worst kind of 9:30 that you're gonna experience, right? And this is gonna be present within every time-based volume injection profile, right? Because sometimes what you see or what we tend to want to see and utilize as an opportunity can initially be set to become a smokescreen, a distraction, right? A trap, to initially say the least, right? This is when 9:30, right, is initially neutral, right? It lacks direction. You understand? It lacks direction, it lacks substance. And this is usually present prior to a highly influential upcoming day, whereby now, let's say today it's 9:30. Tomorrow we're expecting there to be a Red Folder News event. We can expect these footprints to present themselves a day prior to a highly influential day, right? Secondly, this will also be present often on a day after a large expansion day. You understand, right? But note and understand that this market opens, right, just because they present and are setting themselves as smoke screens or traps, right? This will initially hint to you. Sometimes you may initially lose because of this, right? But this will initially hint to you that delayed distribution is most likely to happen. Why? Because volume at 9:30 has already been induced into the markets, right? It lacked substance and direction, but understand that the algorithm has been activated, meaning it has now been allowed to begin to initiate spooling. You understand? It's now allowed to spool, not necessarily at 9:30, but during a delayed distribution time, which is pretty much your 9:45 to 12 o'clock, right? The rest of the session. You understand? It's just you waiting 15 minutes after, right? 9:45 to 12 o'clock, right? Okay, so often signals like delayed distribution are pretty much always going to be at 9:45, right, to 12 o'clock, meaning price may experience significant moves of volatility, right after 9:30's market open, right? And note, these tend to be very hard sessions to trade. Why? Because before you can identify this, you may initially have to lose a trade, right? This is why this is the worst type of volume injection, or it's the second worst type of volume profile to initially trade within. The fifth one would just be an accumulative day where price remains like this for the whole entire day, right? But yeah, guys, this is pretty much time-based volume profiles based on the 9:30 market open. You understand? Hopefully everybody has a good day.